Today's number? 300. That's how many times the average 4-year-old laughs per day. Meanwhile, the average 40-year-old laughs just 4 times per day, a very sadly low number. According to studies, that number can go even lower depending on your exposure to stress, anxiety, and Scott Galloway's dick jokes. Welcome to Prof G Markets. I'm Ed Elson. It is August 5th. Let's check in on yesterday's market vitals. The major indices all rose, bouncing back from Friday's sell-off. The S&P 500 saw its strongest single-day rally since May. Oil fell after OPEC said it will increase production starting in September. And Palantir stock popped in after-hours trading after the company reported earnings that beat expectations and hit $1 billion in revenue for the first time. Okay, what else is happening? Job growth stalled in July, and in response, Trump fired the nation's top labor statistician. The Bureau of Labor Statistics reported Friday that the U.S. added just 73,000 jobs in July and sharply revised the numbers for May and June downward. It was the largest downward revision since 1979, excluding COVID-era adjustments. Hours later, Trump fired the commissioner of that agency, accusing her of manipulating data. On Truth Social, he said it was rigged in order to, quote, make the Republicans and me look bad. He also claimed that she, quote, faked the jobs numbers before the election to try and boost Kamala's chances of victory. The markets did not like any of this news, and the latest tariff blitz only compounded the trouble. The Dow fell over 1%, the S&P 500 fell 1.6%, and the Nasdaq more than 2%. More than $1 trillion in value was erased on Friday. It was the stock market's worst day in over 2 months. So here we are. It's a new week, and Trump is now set to appoint a new BLS commissioner in the coming days. Now, the funniest part of all of this is that actually the July jobs numbers were not that bad. The real problem was this downward revision to the previous numbers. And what's so ironic about that is that this is the very thing that the Republicans used to accuse the Biden administration of doing, but in the other direction. The Republicans accused the Biden administration of fudging their original numbers and then quietly revising those numbers back down to the real number, which was all thought to be part of this deep state cover-up. Well, by that same logic, the commissioner was doing the same thing for Trump, the same thing she did for Biden. That is, come out with these great numbers in the initial report and then quietly revise them down later on. That was the thing that the Republicans complained about. But no, apparently that rule no longer applies. This time, it's the revision that is the fake number. And it's the initial number that's real. The revision downward was fake. The real number is the one that was good. Put another way, when the data looks good under Biden, the BLS is lying. And when the data looks bad under Trump, the BLS is lying. So the BLS is only telling the truth when it makes Trump look good. That is what he told us this week. It's not hyperbole. It's not TDS. That is the reality. So we have now officially entered the part where the leader shoots the messenger for bringing the bad news. Oh, my job numbers are bad? You're fired. You think tariffs cause inflation? You want to keep interest rates high? You're fired. This is where we are now. Now, you might be thinking, a lot of people are thinking, this story feels familiar. Where have I seen this story before? And you would be right, because the reality, which I pointed out on MSNBC last week, the reality is that this is a chapter in the story of almost every iconic villain in history. I mean, this is what Cersei Lannister does in Game of Thrones. This is what Commodus does in Gladiator. This is what Voldemort does in Harry Potter. You receive an inconvenient truth from a subordinate, and in a fit of anger, you shoot the messenger, be it through public execution or through the Cruciatus curse, or in this case, through firing. And to be clear, I'm not saying Trump is Voldemort. What I am saying, though, is that there is a reason that this has triggered such a strong emotional response from people and from the markets, and it's because they've seen this before in books and in movies and in cartoons. This is the classic evil dictator gets drunk on power move where you refuse to see the truth and you inflict pain on anyone who tries to put it in front of you. And I apologize for the hot take here, but the president behaving in ways that make him look like a Disney villain, I think that's kind of a bad thing. I think we should try to not have that. And by the way, it's not just cartoon villains that do this. It's real villains too. This is what Mao did when his generals told him that his policies were causing a nationwide famine. This is what Stalin did when his aides brought him bad news about the harvest. This is what Putin does today. This is what Kim Jong-un does today. This is what they all do. There is a reason why this is a theme in both reality and fiction. There's a reason why shoot the messenger is this well-known idiom. It's because it happens. It's a very convenient and effective strategy when you're in a position of power. If you need to lie about something, well, then it helps to have an incentive structure in your organization that promotes the lie. So punishing people who tell you the truth, that helps you. Rewarding people who tell the lie, that helps you too. That's why we see this over and over and over again. Nothing ever really changes. And so why on this occasion would we pretend that this is any different? I mean, seriously, this is getting out of control. And I know the comments are going to say, he has Trump derangement syndrome. He's crying again online. Oh, I thought this was a markets show. Why isn't he talking about markets? I am talking about markets. We're talking about the jobs numbers, but the president just said the jobs numbers are fake. So yeah, we can't gloss over this very important detail. If we're going to talk about the economic data, we have to at least agree that the economic data is real. And apparently we don't. And the worst part about all of this, once we have Trump's pick for BLS chief, you just know it. All the liberals are going to say the same thing that the Republicans said. They're going to say, nope, the data is compromised. The data is fake. That's where we're at. So look, we were already entering into a post-truth world where, the line between data and narrative was already getting pretty blurry. But as of last week, I'm sorry to say, we have officially been blasted through the door. We're there now. Any data that comes out of the government, that comes out of the Bureau of Labor Statistics or any other government agency, as of now, that data is a matter of opinion. And that is a world that we're actually not familiar with. Perhaps Argentina is, perhaps China is, although if you start debating the data and you're an economist, you get disappeared. That's what happens there. But we are not familiar with this in America. Now, I'm not exactly sure what that's going to mean for this show when we talk about data and economics. I'm not exactly sure what it's going to mean for the study of economics itself. But what I am sure of is that this changes things. This fundamentally changes things. And in our view, here at Prof G, this is the most bearish signal for truth and veracity in our economy to date. We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Vanta. Are you a startup founder or security professional? If so, you're going to want to listen up. Navigating vendor security requirements can be challenging. Facing your first security compliance audit can be downright scary. With Vanta, it doesn't have to be. Vanta is a trust management platform that helps businesses automate security and compliance, enabling them to demonstrate strong security practices and scale. Simply put, your company can't grow if it can't prove that it's meeting security standards, including SOC 2, ISO 27001, and HIPAA. Vanta can get you audit ready in weeks instead of months, saving you up to 85% of associated costs. And Vanta scales with your business, helping you continuously monitor compliance, unify risk management, and streamline security reviews all in one place. More than 10,000 global businesses trust Vanta to achieve compliance and save them time while they're at it. Starting and running a business is hard. Let Vanta help make it a little bit easier. Go to vanta.com/markets to meet with a Vanta expert about your business needs. That's vanta.com/markets.
We're back with Prof G Markets. Elon Musk may be headed for a $29 billion payday. Over the weekend, the Tesla board approved an interim pay package of 96 million shares. The pay package will vest over 2 years if Musk stays on as CEO or holds another key role. Tesla stock climbed 2% on Monday. As a reminder, Elon Musk's pay at Tesla has been the center of a years-long legal battle. Back in 2018, the Tesla board approved a record-setting pay package for Musk worth up to $56 billion if certain milestones were met. It was the largest potential compensation opportunity ever observed in public markets. It was also 33 times higher than the nearest comparison, which was, by the way, Musk's prior compensation package. Shareholders approved the plan at the time, but a Tesla investor sued, claiming Musk had too much control over the board. Then in January 2024, a Delaware judge ruled that the pay plan was improperly granted and ordered that it be rescinded. The court said Tesla's board wasn't independent and Musk's influence dominates the decision-making process. The board has since appealed that ruling, and the case is still pending in Delaware's Supreme Court. So while that legal battle plays out, Tesla has offered Musk this new $29 billion package in order to, quote, keep Elon's energies focused. With the new shares, Musk would own nearly 16% of Tesla, a stake that would be worth more than $150 billion today. So to help us break down this latest compensation and what it means for Tesla, we are welcoming back Charles Elson, founding director of the Weinberg Center for Corporate Governance at the University of Delaware. Charles Elson, thank you very much for joining us again on Prof Markets.
Great to be with you again, Ed.
I would love to address you as Uncle Charles, but I'm told that's not professional, so I'm calling you Charles Elson.
That's what they call me.
I love it. I feel like Chris Cuomo in 2020.
Very true.
So Tesla has proposed this new package of $29 billion for Elon Musk. The question I have for you, where does this fit in terms of the legal dispute with the Delaware Court of Chancery? Does this solve the problem?
Well, no, it's an end run around the decision, basically, if you think about it. And the decision said this package was no good. It explained why. And suddenly a new package appears that basically is very similar to the old package. But it's done in a way that it looks like it's a new package. And they've said that if the Delaware court approves the old package, the Supreme Court approves it, then they'll drop this and it'll go back to the old. But if the Supreme Court doesn't and strikes it down, then this will be the new package. But remember, they moved from Delaware to Texas. And in Texas, there's a different sort of regime, if you will. In Delaware, any shareholder could sue to block this. In Texas, there's a new rule in Texas. It said only a 3% shareholder or above can sue derivatively, which is what this claim would be. So basically, if the shareholders approve it, it's bulletproof, which is really kind of, for the investors who oppose it, is really a very problematic. That's really why they should have, I think, stayed in Delaware. But also, if you think about it, if you can simply pick up and move somewhere else to avoid a judicial ruling, there's something really wrong there. Actually, in the end, what it will do is if you go to Texas and you can't bring an action, it just means people who own stock who are unhappy will, A, probably not invest in a venture that doesn't respect them, or B, if they do, it will be through debt contract, because a debt, you can always contract your way to remedies. Really, and have it enforced by a court. Can't do that with equity. The court is critical to equity, protection of equity, and that's what Delaware was about. But obviously, someone thinks differently.
What would you say to the shareholders who say, no, we do want this? And there are many of those shareholders. They voted 77% that we want to give him the $56 billion. And point taken, I'm sure there are investors out there who say, no, that's too much, that's excessive. But I think, the counter argument to what you're saying is, the shareholders said, we like it, we like that package. The Delaware court says that doesn't make any sense. And I think a lot of people would say, well, why is it up to Delaware to decide what's reasonable? If the shareholders like it, then they can vote for it.
Well, I think the issue was protection of minority capital. look, some shareholders did like it. A lot of them didn't and voted against it. Quite a few didn't and voted against it. And the danger is if you basically give the minorities money away, next time you won't get minority capital. I mean, critical to the system is protection of all investors. And something like this, where a court has said the process that led to it was highly flawed, that they critique the independence or lack thereof of the board, and the sum, they said, was problematic because it didn't incentivize someone. This is the same story. Someone who has that much stock in the company doesn't need to be incentivized to stick with it. He's got, at this point, billions of dollars in the company. Why in the world do you have to incent him to stay?
Yeah, I just want to read you a quote from the board statement, because this was the issue, was how do you incentivize him? And the court said, you don't need $56 billion to incentivize the guy to go to work every day. Here was the board's quote in their new letter. They said, quote, "Retaining Elon is more important than ever before. We are confident that this award will incentivize Elon to remain at Tesla." So they're essentially saying, this is the amount of money we need just to get him to stay there. That's what we need to pay him. So I guess my question to you is, one, do you believe that that is a good faith argument from the board? And two, what do you think is the right number? What's the reasonable number to get a world-class talent like Elon? We got to give him his credit to stay at the company and keep working there.
Well, number one, I just find it very unusual that they said, well, this is what will keep him there. Otherwise, he will go. I don't believe he'll leave. I don't think it's it's certainly not in his interest to leave. And frankly, how do you know you're going to get what you pay for anyway? I mean, at this point, Tesla, yes, it hit heights, but we haven't seen such a fantastic Tesla of late. Tesla's got some real issues, and everyone knows that. So, and some of the issues, it was argued, may have been caused by him. His departure, the political issue, his actions hurt not just his own stake, but everyone else's. I just don't believe it takes something like that. And no one's that good. Let me ask you this. What happens if tomorrow he was crossing the street and gets hit by a bus? Does the whole world stop? Will Tesla stop if he's hit by a bus? Let's say he wakes up tomorrow and says, I just want to live on an island and I really don't care about anything. I'm going to go bring some coconuts and sit there. Goodbye, world. The world isn't stopped. No human being is so vital to the world that everything stops. I believe this approach is rather foolish. And frankly, if someone says to you, I'm threatened to leave or else, they're going to do it again. At some point, you got to say enough. Okay, go ahead. As I said, you may get hit by a bus one day and, you'll have to find someone, but usually you do.
Exactly. It seems as though that there is a cultish vibe around him, which the markets seem to agree is acceptable, and no one can imagine this world of a Tesla without Elon, and so they're willing to pay $30 billion to avoid that. But just to go back to the original question, you've had a lot of experience on a lot of different boards. You've worked with many CEOs. Again, what do you think is reasonable? What does make sense?
I think it has to be negotiated. You have to have, it has to be a board that's independent of him, that represents the shareholders, period. And I think she found this board wasn't independent. And listen, it resulted in a negotiation, a fair negotiation, where both sides are trying to maximize their own position. Usually you get to the right place. And there's no set number. I doubt a real negotiation would produce numbers like this, put it that way.
Yes.
Who would?
Yeah. Well, we really appreciate your time, Charles. I hope to have you on again soon. Yeah.
Always
thank you
fun,
very much.
man. Good seeing you. Take care. Bye-bye.
Bye-bye. I asked Charles what he thinks is a reasonable compensation package for Elon Musk. We got his answer, but we'd be interested to hear what you think too. What do you think is the right pay package for Elon? Let us know in the comments. We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Attio. Attio is an AI-native customer relationship management system built specifically for the next era of companies. It's extremely powerful, adapts to your unique data structures, and scales with any business model. They say setting up Attio takes less than a minute, and in seconds of syncing your emails and calendar, you'll see all your relationships in a fully fledged platform, all enriched with actionable data. Attio can enrich your business with real-time customizable reports featuring valuable data points. And the best part is you can build AI-powered automations and use its research agent to tackle some of your most complex processes so you can focus on what matters, building your company. Join industry leaders including Flatfile, Replicate, Modal, and more. You can go to attio.com/ProfG and you'll get 15% off your first year. That's attio.com/ProfG. Support for the show comes from SoFi Small Business Lending. If you run a small business, you're probably dealing with cash flow, trying to find capital for new opportunities, or thinking about other ways to expand. SoFi's Small Business Lending Marketplace is your new best friend. No more chasing bankers or wasting time at a branch. SoFi's Marketplace offers a fast digital solution. In one single simple search, SoFi matches you with vetted providers for your business in just minutes. Search for quotes that meet your specific needs, and you can find an option that works for you. You may receive funds as soon as the same day you're approved. Say it's working capital you need, or a line of credit, or an SBA loan, or equipment financing. SoFi's Marketplace can help you find all of the above. It's already helped thousands of small businesses find the funding they need. SoFi also offers business owners curated tools, vetted business bank accounts, business credit card recommendations, and a ton of resources to help you scale your business like a boss. SoFi, now helping you get your business right. Visit sofi.com/ProfGPod and see your options in minutes.
We're back with Prof G Markets. Trump's praise for a controversial ad has sent a retailer's stock soaring. Shares of American Eagle surged more than 23% yesterday after he applauded the brand's campaign featuring Sydney Sweeney. He wrote on Truth Social, quote, "Sydney Sweeney, a registered Republican, has the hottest ad out there. It's for American Eagle, and the jeans are flying off the shelves. Go get him, Sydney." Now, why is he even talking about this? Well, I'm sure you know, but as a reminder, American Eagle launched this ad campaign titled Sydney Sweeney Has Great Genes.
Genes are passed down from parents to offspring, often determining traits like hair color, personality, and even eye color. My genes are blue.
Sydney Sweeney has great genes.
The ad got some backlash online. It prompted yet another culturally and racially charged debate. And then when Trump learned about Sydney Sweeney's political affiliation, apparently she's a Republican, he obviously had to get involved. Now, I have to be honest, I don't care about this debate at all. I think it's dumb and I think it's a waste of time. However, I do care about the way in which the markets are now playing a role in this debate and debates like this. The fact that American Eagle can accrue over $400 million in market cap in one day just because it is the subject of this cultural controversy. That is new. And I don't know exactly what to make of it, but I do know that it says something about this current moment in the markets. So to help us unpack this, our producer Claire spoke with Kyla Scanlon, author of In This Economy, How Money and Markets Really Work.
Yeah, I mean, all the meme stocks have been on a big tear recently, like any sort of attention toward like Krispy Kreme or GoDaddy, and the stocks are ready to roll. It seems like there's some excess capital in the markets that is able to go into these meme stocks. And with the American Eagle situation, I'm not surprised because President Trump is such a good attention harvester that essentially whatever he touches, it's going to go up in price. Trump coin is a key example there. And so it makes a lot of sense that this happened and that people would see him tweeting about it as a catalyst for the stock.
Do you think American Eagle planned for this kind of reaction? Do you think they saw it coming at all? Or did they sort of just stumble into this attention economy and play it well?
I think there's a good article on Adweek that touches on how important controversy is right now. Essentially, controversy is a commodity. And so if you can make a lot of people mad, you're probably going to have some elements of success because everybody's so polarized.
Right. It's almost like controversy is this cheat code in the attention economy. But my question is, will it actually translate to a sustainable strategy and convert into brand equity for American Eagle? I mean, Trump was saying jeans are flying off the shelves. I don't know if any of that's true, but do you think it could, translate into actual sales for them?
I mean, they lost almost $70 million in their first quarter of 2025 as a company. So I don't know if that a controversial ad is going to help them gain $70 million. I think that when we look at stocks that kind of play, or companies that play this controversy line, like maybe Rumble, for example, they don't tend to do that well. And so I think it kind of works as a short-term boost, but it often doesn't translate into any real business fundamental. Like, I think what's going on with American Eagle right here is a great example of a stock not necessarily reflecting the underlying company. The stock market is divorced from everyday experiences increasingly, like just does not reflect underlying fundamentals at all for a lot of companies. And I think just this American Eagle situation is case in point for that. It's very much an example of it.
And final question, what do you make of the market's reaction to the latest with Trump throwing his support behind the ad? Do you think the market's saying, yes, we're into this anti-woke moment? Or is it more like traders are saying, this is ridiculous, hilarious, weird, we just want to make it even crazier and run the stock up?
I mean, it's interesting because I don't even know if it was an anti-woke moment. Like, the campaign was supposed to support a domestic violence charity, right? And so it seems like everybody just skewed the narrative totally out of control. But I think that for finance people, they see an opportunity in it. And there's a meme about it, Trump is tweeting about it. And so there's a lot of power behind that. And so I think the market is just looking for any sort of catalyst.
That was Kyla Scanlon, author of In This Economy and also a frequent guest on Prof G Markets. Whatever you think of the ad, I think it's important to simply observe what it has done to the stock price. To Kyla's point, it is just indisputable the extent to which attention has taken on a life of its own in our economy. Attention isn't just noise in the economy, it is the economy. And in a lot of ways, it doesn't really matter how you get it. It could be through controversy or through outrage or even a simple meme. It doesn't really matter. All that matters is that you obtain it. That's what matters today. We saw it with GameStop. We saw it with many of the stocks that Kyla mentioned. We saw it more recently with Astronomer and that whole Coldplay concert CEO debacle. And we're seeing it again today with American Eagle and Sydney Sweeney and now Trump. Now, does that mean American Eagle is a good investment? No, not at all. In fact, I'm waiting for the stock to come crashing back down. But it also doesn't mean that the stock couldn't rip another 50% this week. All it would take is another tweet from the president or another meme from the White House, and you could see another several $100 million in market value created overnight. That is genuinely possible, and that is just the world we live in. And the question is whether you really want to participate in that as an investor. Me personally, I'm good. I have no interest in participating, but it is certainly true the world of meme stocks is expanding, and this, combined with everything we've seen over the past few months, is proof that the world of meme stocks is not going anywhere. Thank you for listening to Prof G Markets from the Vox Media Podcast Network. If you liked what you heard, subscribe to our YouTube channel and tune in tomorrow for more.